Well, more than 1 million households are now crippled by mortgage stress, according to new figures. Finance editor Ross Greenwood joins us now. Ross, really stressful times for so many families.
It is.
What is the main driver? Is this all about stagnant wages predominantly?
Partly about that. But you know the weird thing about this survey that's come out from Digital Finance Analytics, and they've done a survey of Australian households and basically shown the amount of stress because of mortgages inside those households. And what they discover is it's not just low-income households, it's high-income households, it's all households that could potentially suffer this stress. So let's say, for example, you've got a couple, young couple, got kids who have just bought their first house. If they're in Sydney or Melbourne and have had to pay these record prices that have been around these last little whiles, they've taken on a monster mortgage. Chances are that they're probably spending more in their cost of living, including their mortgage, than what's coming through the door. Where's the money coming from? So that is defined as mortgage stress. But it could be a low-income family. It could be people who have been on relatively low income, say public servants, nurses, doctors, whatever they might, or rather police officers, whatever, who have gone to the outer suburbs. They've bought a house and all of a sudden they find themselves in this mortgage stress. So they're saying 956,000 households face mortgage stress. It's about 30% of all households. 21% of households have severe mortgage distress, and more than 55,000 households face a default because they end up missing a mortgage payment over 30 days. That's how serious this has become.
Yeah, it affects so many people. So what do you do about it? If your wages aren't increasing, cost of living just keeps going through the roof, what do people do?
There's your problem of life, isn't it? Your problem of life is, where does the money come from? So a lot of these families, I'm certain, are trying to find extra work. But we've still got relatively high underemployment in Australia. There's not as much work around. There's not as many hours around the place. So do you go and get a second job? Some people try and do that to work weekend. Or Uber, say, for example. People jump in a car and just try and earn some extra cash. But then on top of that also, where does the wages growth come from? Now, what we know at the moment is lots of jobs are being created in Australia. But the problem is that's still not bringing enough money into many of these households to take the pressure off. So therefore, you say, well, OK, pay rises. Well, OK, where does that money come from? So it really is one of these situations that if interest rates were to start to rise in Australia, these families would be highly vulnerable. And so what we're seeing right now is another reason why the Reserve Bank is not going to move interest rates anytime soon in Australia.
It's not a pretty picture, is it?
It's not.
Ross, thank you very much.